This master class is going to change your life if you're listening to some of the things I'm going to be saying in this training, because this training is going to be a three-part video where I'm going to be explaining to you guys exactly how I trade, or the title of this master class, which is how I trade the Forex market profitably. Now, I am channeling everything to me. I'm not saying that what I'm teaching here is the only way to trade the Forex market. There are different ways to trade the Forex market, but these are the things I've discovered by myself and I found it working, and it has built consistency in my trading for the past 4 or 5 months right now. It has been a huge success trading this way. After learning from different people, different concepts out there on social media, I was able to, give myself that discipline to study the market, to look at the market, and I discovered a lot of things. Now, these are the things I'm going to be, explaining, or things I'm going to be teaching in this masterclass. The first thing is, what is trading? We actually need to understand what is trading, because trading is not just something you do on MT4 or MT5 or what you do on TradingView, in as much as that is the electronic way of doing it. But that is what trading is, looking at how the world works, understanding what trading is all about. The second thing we're going to be looking at is, what is market structure? A lot of people already know what is market structure, but we're going to be talking about it. Some people will be like, oh, I've learned about market structure, which is uptrend, downtrend, all of those things. Now, you might skip it and watch other parts of this video, because I said this masterclass is going to be a three-part process. The first one, I'm going to be focusing on the theory. The second and the third, I'm going to be focusing on the practical. I'm showing you things that are already in the market that you are not seeing. So if you're a struggling trader, this is the right video for you to watch. I believe after watching this, you're going to have a lot of clarity. I like the way I teach, because you're going to hear me say a lot of things. I am going to say a lot of things to open your mind to start thinking. A lot of us just make a lot of mistake by what we are being taught, not by following the flow of the market. I'm still going to be explaining that in this video as well. So you need to also pay attention to the way I look at market structure for you to truly understand what I'm actually talking about. We're also going to be looking at uptrend. What is uptrend? We're also going to be looking at what is downtrend. I know some of you already have knowledge, which is higher high, higher lows. But I want you to pay attention and listen, and pay attention to some of the things I'm going to be saying when I'm explaining it on the theory aspect and also on the practical aspect. Because the problem of trading is that most people always learn diagram. Now, once you learn diagram, you start forcing the market to play exactly the way you draw your diagram. And that is not how trading works. Of which I'm going to be showing you that when we start doing the practical aspect. Then the fourth thing we're going to be learning is, what is support and resistance, and what is ranging markets. We're still going to be looking at that. I'm also going to be teaching you guys how I use RSI to make consistent profit. I know some of you know about RSI, or maybe this is the first time you're hearing about RSI. RSI simply means relative strength index. I use it to be able to solidify my entry. Let's say, for example, I already know where I want to enter. Pay attention to what I'm saying. I already know where I want to enter. Now, if I already know where I want to enter, I just need to look at RSI to get more confirmation, or to be able to give more confidence for me to take a buy or sell. I'm going to be showing you that. So this is not a video whereby that people tell you when RSI is at 70, you sell. If it's at 30, you buy. That is not what I'm doing with RSI. I discovered a new way of looking at RSI by myself with a settings that I created by myself. Like I told you, everything is the things I've discovered in the market. Then the sixth thing I'm going to be teaching you guys is things I discovered in the market that no one taught me. Like I said, no one taught me. Maybe somebody out there is teaching it. I don't know, but I'm going to be showing you guys this thing. The things I discovered. I think it's about 5 of them. I've already written it down, which I'm going to be explaining to you guys. And all of these things was as a result of experience. Because why? I used to enter the market. All of a sudden, I'm expecting the market to continue going down. Let's say I'm on a bearish market. All of a sudden, the market started reversing. I don't know why all these things are happening. Now, I was actually studying and I noticed a lot of things. I'm not trying to say it works 100%, but I can tell you it has improved my winning rate up to 80%, of which I'm going to be teaching you guys. I want to talk about experience. Experience is something that nobody can teach you. You can buy all the course in the world from different mentors, from different educators, of whoever. But if you don't sit down to do the real work, which is trading and experimenting, knowing what is working for you and what is not working for you, what you need to add and what you need to remove. If you are not willing to do that, you cannot really make money in trading. I need to give you the bad news. Nobody can actually make you a profitable trader. You owe it to yourself to become profitable. People can only teach you what they know. Now, for what they taught you, you need to, craft consistency around it. You can even add your own as you go along. It is very important for you to understand that that is how trading works. But most people are looking for and maybe ABC strategy. Once this happen, do this. All of those mechanical way of doing things like is already structured. I can tell you the market is not that way. The market is something that a lot of things can happen at any time. So you just have to develop your intuition and build the experience and get better. So let's get down into the training so that I can start taking you on this theory before I move into the practical. See you on that video. Welcome back. Like I said, we're going to go straight into what is trading. Like I said in the previous on the beginning of this video. All right, you can see what is trading. Trading simply means buying and selling for profit. The way people go and buy things and selling, normal physical trading. If you're living in Africa, if you're living in any part of the world, you see people still doing this thing today. This is people buying and selling something for profit. And that is the same thing we do in the Forex market or any market or crypto market or stock market, any market of your choice. As you can see right there, trading is the act of buying and selling assets with the goal of making a profit. This asset can be anything from stocks, bonds, and currencies to commodities like gold and oil. This is not where it stops. You can do a lot of things with trading. You can trade a lot of things like you can trade rice, you can trade beans, you can trade yam. All people are doing all these things just to do what? Make profit. Now you can see the next thing there, key points about trading. Now there are key points about trading you need to know. That is short-term focus, unlike investing, which often involve holding assets for a long period of time. Trading aims to profit from short-term price fluctuation, exactly what we do in the forex market, just by price fluctuating. And the way we are trading online, you can also do it physically by buying a physical dollar or physical euro. But you can imagine the stress of doing all of those things. But because of technology, everything is now done electronically. So you need to understand that this is just what trading is. People trying to buy and sell to make profit. Let's say, for example, you bought dollar at 1 and price go to 0.5. It means that you're on loss. You still have your dollar, physical dollar, for example, but because the dollar you bought it at 1, but right now is now at 0.5, meaning that you have lost some money, but you still have your physical dollar. But in trading, in forex trading, which is the one we are doing, because we are using leverage, because we are using margin, we're no longer buying the physical dollar, we're just trading the numbers to be able to make profit. So that's just how it works. Now, also, one of the things you need to understand about trading, which is one of the key points about trading, which is risk. Trading involves inherent risk. Price can go up and down, and it's possible to lose money. You need to understand this. This is the nature of trading, and that is the nature of everything about life. Everything you want to ever do in life, all of them carries risk. All of them goes up and down. There is nothing that you can say, oh, this thing is guaranteed. It can never fail. No matter what you are doing, all of them involve risk. Now, I used to tell people, whatever you choose to do in life, all of them involve suffering. But you have to choose the one that is worthwhile and choose to suffer on it. You can imagine someone, doing something that he or she can be earning low income. Most of them will be exerting a lot of energy to do that, but because of the choices they made to do that thing, they start making little money. But people who choose the side of trading, they are not even putting the kind of energy some people are putting in different things they are doing, but because they put that energy and decided to learn the skill and get better, that is why you can see them making thousands of dollars. And that is, it's just about decision. So it's very important for you to be very mindful to the kind of things you decide to do, because it can determine the course of your life. For me, trading is everything for me. Now, market knowledge is important. Trading success requires understanding market trends, economic indicators, and various trading strategies. Now, like you can see there, it requires a lot of understanding market trends, economic indicators, and various trading strategy. Like I said, all these things just sum up one thing, which is experience. Now, you're going to be learning a lot of things in the beginning. For example, someone that wants to learn any skill, the first time of you learning anything you are doing right now, you are not good at it. There was a time of trial and error. You are making mistake, but the reason why you are good at that thing right now is because you did not give up. Imagine if you gave up, you will just you be a failure in that thing you are doing. But you didn't give up. You get better, and that is why you are making money in that thing that you are doing. So the same thing with trading. So if you continue and learn from your mistake, one of the problem people have in trading is that when they make loss, they run away, thinking that, oh, I just have to run away because I've started making losses. That is not how it works. It means that you have to improve. It's about self-development. Nobody is looking for your money. A lot of people think that once they take buy, the market will start selling, that the market is always watching them. Nobody is watching you. You just have to tell yourself that you need to get better and improve as a trader. Then the last thing there is variety of assets. You can trade wide range of assets, each with its own characteristics and risk. You can imagine there are different kind of assets. There are forex market, there are metals, which is futures market, there are crypto market, there are stock market, there are bond market. There are so many markets to trade. There are even this one called derivative. A lot of people are doing it right now, whereby that people are trading every day. For me, I don't want to be trading derivative. I always like to trade the forex market because I use the weekend to relax. I don't want to be trading all the time. I need to have time for myself as well. So I am only trading the forex market, but I also invest mostly in the cryptocurrency market. In this YouTube channel, you can also see some videos about cryptocurrency. I only invest in crypto, but I focus in forex trading, specifically Euro USD. That is what I do majorly. I don't really look at every other pair. I just focus on Euro US. But what I'm going to be teaching you right now is working in any dollar pair that you can ever you want to trade, except for JPY, USD JPY, because sometimes I notice that JPY could be very crazy, because JPY has been a very crazy currency whereby that the central bank has not intervened. So JPY has been weak for years. So being very mindful when you are trading JPY. Okay, let's go straight into the market structure so you can understand what market structure is all about. All right, so this is market structure. Like I told you guys, this is the theory aspect of it, where we'll go into theory for me to be explaining this in theoretical form, but I'm still going to go into the technicals, which is the practicals, so you can see all these things I'm saying here and the way I look at the market. You can see right there what is market structure. Market structure in forex trading refers to behavior, condition, and current flow of the market. It's essential how the market is behaving at a given time. It is very important. It means how the market is behaving at a given time. Look at the word there, market. They didn't say how the candle is behaving. Some people make decision of buying and selling if they see a red candle or a green candle. It does not work that way. No, you can't say the market is bullish because the candle is bullish. You can't say the market is bearish because the candle is bearish. Like, you need to understand the behavior of the market, of the overall flow. You can see the current flow of the market, of which I'm going to be showing you how to look at the flow of the market in this video when we start talking about uptrend, downtrend, and ranging market. We're still going to get there. You can see right there key components of market structure: support and resistance level. These are price levels where the market has historically reversed direction. You can see right there, we're also going to be showing you that. You can also see trend, the overall direction of the market, upward, downward, and sideways. We're going to also look at that for you to understand. You can see it is called trend, not candle. It is called overall direction, not a candle direction. You need to also understand the overall direction of the market determines the flow of the market, either on the upward side, on the downward side, or on the sideways side. You can see swing highs and swing lows. These are significant price peaks and valleys that mark potential trend reversal. Price phases: market can be in trending, ranging, or breaking out of a phase. These are different phases in the market of which you're going to be experiencing this. All you need to do in trading to get better is to train your eyes. Like I'm saying this thing right now is not just for me to tell you that this is how it is. You can be seeing it in a different form by yourself. So start training your eyes to be identifying things. Don't always rely on everything someone teach you. You can also educate yourself, because why? The forex market did not give out a blueprint on how it is being traded. There is nowhere forex market dropped out a blueprint. The market said this is how to trade me. Everything that you are seeing right now that people are using to trade the forex market or any market of your or out there, it's all human creation. It means that some people went and do research, and they saw a lot of things happening in the market which is very identical. They were able to put those things together, and they form all these things you are seeing here, all these strategies you are hearing up and down. So that is how the forex market is. So you can also discover what works for you, or even a new way of trading just by yourself. So I'm going to be also explaining more on that in other videos. So let's go into uptrend so we can look at uptrend. What is an uptrend? This is what I'm going to be treating right now. An uptrend is a consistent increase in the price of financial assets over time. This is characterized by a series of higher highs and higher lows. There are also major and minor uptrend depending on the time frame you are looking at. I'm still going to be explaining that to you. What it means is that, let's say for example, you are using daily time frame to be able to mark market structure or uptrend. It means that on the 4 hours you're also going to see uptrend, but they will show like the daily. It means that also on the 1 hour you're also going to be seeing uptrend, but they will show like the daily. So but on the 1 hour you see a lot of candles, reactions everywhere, but you need to understand it and pay attention to this. It's just that it's not that someone draws a diagram and show you, okay, this is uptrend, and if you go to the chart, you start from the diagram you saw, you start forcing the market to show you that diagram. That is not how it works. It's for you to get the concept of what is uptrend. Then you can go to the chart and now see it form in different variation. I want you to understand the market. Uptrend is always there in the market. Downtrend is always there in the market, but it forms in different variation. Nobody knows how it's going to form. That's the truth. But you have to train your eyes to be identifying areas, where you can be buying and selling as the market keep printing structures. Now, let me show you an example of an uptrend that I have right here. This is some of the example I've put together. As you can see right here, let me just easily take this off so we can actually be on the same page. Now, if you look at these two things right now, these two things right here, you can clearly see that all of them are going up, but they didn't go up the same way. You can see this one went up, it went up, in a kind of like in a channel format, go zigzag format. You can see the way it just go up, come down, go up, come down. This is an ideal uptrend that what most people are looking at. Let's say if you tell them to go and look for uptrend, they might be looking for stuff like this, but they don't know that uptrend can also form like this. But let me also explain what an uptrend is so you can also understand. Now you can see the way the market from here, you can see my cursor right there. You can see it pushed up, created a high. Oh, okay. This is black. Let me change the color of this pen to maybe red. Yeah, red is fine. Okay, you can see the market created a high right there. Now it created a higher low, but you can see this low did not go lower than this one. You can see it didn't go lower than this one. Guess what it did again? It created a move again. Now, when this market breaks this structure, what I mean by breaks is that price surpasses. Let's say the price there was 10. Now the price is now about, let's say now 11 or 12 or 15. So once price surpasses it, it means that price has broken that previous high. So now the question is a lot of people have in their mind is, should I take weeks as break of structure, or should I take a body close? For me, the answer to that question is it depends on the market, environment, or the nature of the market, or how you find the market. Because there are sometimes the market will just weak it and come down like this, and it is still part of break, whereby that the market can just weak it like this and sell all the way down. And guess what happened? It push up again. Because some people only take body breaks. Let's say, for example, price breaks this high, it must have a body close before they see it as break. I used to think that way before until I start looking at the market, because the person that taught me Forex, market structure for the first time was only trading body breaks. You know, but I was actually looking for body until I was taking a lot of losses before I now say, okay, wow, I can also be, using wicks as part of breaks. So you can see how experience helped me, because I was able to identify that if I'm always doing this, I keep making losses. So I was able to identify that I can also use wicks as break. But at some point, when you see a wick, that doesn't mean it's a break. It could mean that it's a rejection for a market to sell off. That's why I say that it's everything I'm saying is subjective. It depends on where you are seeing it. Like I'm teaching you this thing now, it looks like a textbook example. It's so explanatory. But if you go to the chart or to the live market, it's a different ball game. That is why you need to pay attention to what you are doing. Be very careful of your actions. So you don't just take what someone tell you at heart and take it as if, oh, this is the way it can be done. It can never be done anyway. If you are thinking that way, you have already started having issue in trading. Someone can teach you something, just ha- just have that knowledge, but don't take it as if, oh, that is final. It is very, very important. So the market can also create another low, but you can see this low has not break, but it can also create another high. This is an uptrend. You can see the way this one come all the way down here and push up again. Now, the problem of what I just draw right now, it looks so simple and easy to understand. But the challenge is, majority of the time, the market will not show you things like this. This is just a diagram from my head. The market will form uptrend in a different way. For example, this is also an uptrend where price will push up, create a high, create a higher low, create a higher high, come all the way down, create a higher low, push all the way up, create a higher high, come all the way down and break this low. A lot of people, when this low is being broken, they think the price has turned bearish. It has happened a lot of times in the market. And guess what happened? Price will just shoot up, turning bullish again. And price will just drop again, push up again, drop again, then push up. So this is different variation. But you just have to train your eyes. It's not every time you see market breaking a low, that doesn't mean it is bearish. Like everything I'm saying is subjective. It depends on where you find it. You have to train your eyes to see these things, guys. Very, very important. That is why you have to do the work. Nobody can do it for you. You have to be the one to identify those things. You need to be even be journaling your trades, because when you journal your trades, you begin to see all these things, you begin to identify them, you begin to know how to take action once you start seeing things like that. So I'm going to go straight into the downtrend because I don't want to spend much time here. So because I also have practical section to show you uptrend in the chart. This is just a diagram, but this diagram is not that it forms this way. It's just to open your mind to see that the market can form in different variation. Another thing again, like I said, I want to also point here is there are also minor and major structure. Let's say, for example, this yellow line, this yellow uptrend here, this uptrend I just draw is 4-hour time frame. Now it means that if you open this chart on 1-hour time frame, you also see price moving up and down, and it will still be showing uptrend, but lower time frame might be giving you more candles. You understand? But you still need to understand that the market is moving in a flow. All I need to tell people is map out major levels in 4 hours. For example, let's say I'm looking at this trade right now. I will just put my resistance here. I will know that okay, if price come back here, I might be looking for a buy, stuff like that. Now, if I go to the lower time frame, I'm not gonna be taking any other low that is along the way, because if you go to 15 minutes, you see a lot of structures in between. I'm still going to show you that so you don't get confused. You're going to see a lot of structures. I'm not going to be buying from there. I'm going to be waiting until that 4 hours that I have in mind, because that is when I know the overall flow of the market. So because a lot of people go to 15 minutes time frame and trade from anywhere, and it can result to taking a lot of losses. For me, I don't trade from anywhere. I'm very selective of where I put my buy and sell orders. So let's go to the downtrend. Oh, just lost this. So let's go to the downtrend video so we can actually understand what is a downtrend. What is a downtrend? You can see a downtrend is a sustained degree in a downtrend is a sustained decrease in price of a financial asset over time. There are also major and minor downtrend depending on the time frame you're looking at. Very important, like what I said in the uptrend, it just vice versa. I'm going to be also be explaining that when we get to the market structure video, which is the practical aspect. So you can also see it's the opposite of uptrend. You can see downtrend is the opposite of uptrend. You can see it's the key characteristics of a downtrend: lower lows. Each subsequent peaks is lower than the previous one. Lower lows. Each subsequent toe-off is lower than the previous one. Downtrend sloping trend line. This is a line drawn connecting the higher high of the chart price. I'm also going to be talking about that. I'm still going to be explaining that to you guys. I don't want this practical, this theory aspect to be so long, so we can actually go into what we have right there. Now you can see a downtrend here. You can see the way it formed. You can see the way it formed. Don't go to the chart and be looking for something like this or something like this. I'm just trying to show you that this is how the market goes. But you just have to understand what to do at every given time. Now let me give you an example of what happened here. You know, you can see the market creating a low, push up, creating a low, a new low. Then it pushed all the way up, surpassing this one. It went above this one, but guess what? It still sells. This is how the market goes. It push up again, stop halfway, and sell again. It push up again to equal area, and guess what? It sell, retrace again, and drop, push all the way up, and drop again. This is a typical example of downtrend, which is creating lower lows. What does it mean? It means that this low, this particular low right here, is this low is lower than this low. You can see, okay, sorry, let me start from there. This low is lower than this low. 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 So it means that the market is consistently creating lower lows. You can also call it LL. Some people call it LL, or you can just write it in full, lower lows. That is just, you just have to train your mind to start identifying these things. So this is another example of a downtrend. Let me show you that. This is also another example of a downtrend. You can see the market creating, you can see this low is lower than this low, 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 this low is lower than this low. Now, at some point, the market might do something crazy. It could just come all the way up and still sell. You just have to understand. And most people call this thing that happened here liquidity. You can see they see that liquidity, market just took liquidity. This is just how the financial market works. I just want you to train your mind. Don't just have one way of looking at downtrend. Downtrend can happen in different variation. You just have to train your mind, train your eyes, and you don't train it in a day. It is about experience, trading, making mistake, taking losses, making profit. All of those things are building you up for you to become a better trader. So don't see it as a negative thing when you lose. A lot of people take it so personal. I don't think we should take losses so personal, but I know it's not easy, but we can do it. All right, let's go to the support and resistance, or the ranging market. Support and resistance. Support and resistance are key components. Support and resistance are key concepts in technical analysis used to identify potential price levels where the market might reverse direction. Support. The definition of support: a price level where demand is strong enough to prevent the price from falling further. Behavior: when the price reaches a support level, it often bounces up. Let's say the market is going down, it gets to a support area, it bounces up. Resistance: a resistance is a price level where supply is strong enough to prevent the price from rising further. The behavior of a resistance: when price is reaching a resistance level, it often falls back down. Significance: it indicates a potential selling opportunity. Now let me explain something to you. You see the way this thing is just simple and explanatory. I want you to understand something. If you understand how trading works, it is not every support and resistance that you enter. It's very important. I draw an example like here. You can see price pushing up here. When price was coming down, why didn't it go up from this support? This red line is a support, but you can see price breaking it down and coming all the way down here and still go up. It means that this support here is weak, but we have a major support right here where price first dropped and push up and drop again and push up. Now, another thing again you need to pay attention, the more the market drops, test a particular level, the more weaker it becomes. Let's say, for example, the market has touched this area 3 times, which is 1, 2, 3. If I want to take this trade, let's say I take a sell, I am not going to take a buy here. Never will I do that, because price has touched this plate for more than 3 times. Because if price is coming back here again, there is a high chance that price is going to break it and continue going to the downside, because it means that there's a lot of selling pressure that is coming from the resistance that is strong enough to break this, because price has retested this area multiple times. But let's say, for example, price created this area and is coming there for the first time, the support will be very active. Market will hold, but it is not all of them. You need to understand the scenario of the market, the trend of the market, the overall behavior. You see the way I'm putting everything together. I'm not saying that anytime you see support, buy, or anytime you see a support on a daily, on a 4 hours, you buy. That is not true. You need to know the condition of the market to know the right support and resistance to take your trade from. So this is resistance, the same thing, the same concept, whereby that once price gets to it, to a resistance, it sells, but not all resistance you can sell from. For example, this resistance failed. This resistance failed. This is also another resistance that failed. This is also another resistance that failed. So you need to know where to buy and where to sell from, of which this is where RSI will help you. This is why you need to watch this video to the very end. Most especially, the third part of this video is so important, because what I'm going to be sharing with you there is something that will make you so profitable. How to use RSI to be able to confirm your entry, how to you use days. I noticed that the highest a trend can last is 3 to 4 days, depending on the pair you are looking at. If you are trading JPY pairs, the trend can last for weeks. JPY pair can be very crazy. But talking about Euro USD, GBP USD, AUD USD, all these dollar pairs, apart from JPY, which is USD JPY, the trend is usually 3 to 4 days, and you could see major retracements. I'm going to be sharing some things with you guys in the third part of this video, which you need to watch to the very end. Like I said, you might not get everything in the beginning of this video, but just watch it continuously and practice and ask questions. You can drop your question in the comment section. I will also go through it. So let's go into ranging so you can understand what is a ranging market. Ranging market. A ranging market, also known as a sideways or choppy market, is one where the price moves back and forth between a specific high price and low price. It lacks a clear uptrend or downtrend or downward trend. Key characteristics of a ranging market: you can see the price fluctuates between defined support and resistance level. Lack of clear trend. There is no consistent upward or downward direction. You can see horizontal price action. The price movement often resemble a rectangle on the chart. You can also show you that low volatility compared to the trending market. Ranging market typically have low volatility. You can see this is a ranging market. You can see what it means, that it usually have triangle. You can see market going up and down, up and down. It's like two people doing tug of war. Nobody, two people doing tug of war. Nobody wants to go up, nobody wants to go down. So this is just a ranging market, and the market will not always be in this phase. At some point it breaks out. But where you can see a ranging market a lot is sometimes in the higher time frame, mostly weekly, monthly. You can also see it in all the time frame in different variation. But you just have to understand the concept. If you are, let's say for example, if you are seeing this on a daily, or monthly or weekly, if you go to 4 hours, this is a super uptrend and downtrend. You need to also understand that if this thing is monthly right now, If you go to 4 hours and daily, is a super uptrend and downtrend. So you need to also understand that. But I don't trade the monthly chart. I only look at the 4 hours daily. Sometimes I look at the weekly, but I look at the weekly at the end of the week. But daily 4 hour, 4 hour is where I actually look at the direction of the market and start planning my decision for the next trading day, or whether to hold position or to close, or to stay away of the market, because I don't trade every day. Market does not give me opportunity every single day. In a week, I could see and trade for like 3 to 4 times. Maximum is 3, but 4 times is rare. But sometimes I see entry 1 or 2 times in a week, and guess what? I'm comfortable. I take what the market gives me and I leave. So we have come to the end of the theory aspect. So we're going to go straight into the practical so we can actually see everything I just explained right here in the practical, looking at the chart, not by looking at diagram. I'm going to be saying a lot of things, so pay attention. Like I said, do not take everything I say or those lines I show you as how the market moves. This is just a concept that you just need to imprint it in your mind. And when you imprint those concepts, then you go to the chart, and with the concept, you can now start identifying uptrends, which is higher highs, higher lows, lower highs, and lower lows as the market is printing them. Because the problem of trading is that most people learn diagram, and when they go to the live trading market, they start forcing the diagram to show up in the chart before they trade. And when the diagram shows up, guess what they will do? They jump in without paying attention to market flow, market environment, market condition, market timing. They just jump in and they could just take a loss. So it is important you start noticing all these things so you can start avoiding the losses and increasing your profitability. Thank you for watching this video, and see you in the practical video.